Welcome, MMT, Saturday morning, and it's a great football day for all of you football fans and fast traders on Google. 9:08 a.m. Pacific Standard Time, 122 of 2012. What a nice Sunday day. What makes a nice Sunday morning is taking a look at, once again, Google. And the why. Because when we bought Google, when we bought Google, we bought it way back, way back. And the thing about it is that the lows over here on this chart of 561, which was where the breakout started to the high up here, 631. Then on a daily level, we had this consolidation. And we had told people on our website, if you type in Google, under the search area, it's going to pull you up to where we started buying it, and not only that, to where it would go to of $670. And that time, you needed to get off board and get short the market. Now, granted, with the big gap down here of its earnings, we have hit what we call on a daily standard level, is that we're at the support gap of the original move that started right over here at 561. That was a shakedown, but then that's where we broke out. And this was on, just so people know, we were buying it before 1125 because we were buying it at lower levels. But neither here nor there is the MMTs need to weight this support gap. The low of this gap that needs to hold support is going to be 581.70. Granted, that 591 was a high, and that's the top down trade. Why? Because in the shorter term, Google will have to work its way back up through these key resistance levels, this being the major one in the trading range. If we break this level here, you can see where it gapped up over here on 1013. Sorry, this was a great earnings report from 548 was a low end. We gapped up here to 599, and ever since this particular gap back in the marketplace, that was a good quarterly earnings here, and it came up, and it also had a way of coming back down once it made its highs. 1, 2, 3, 4, 5, 6 days to that support level. This green line is a simple 200-day moving average. That was its major resistance, but then you had the crossovers and you had all the other good things. What I am saying is that Google would have to hold that support level. This is going to be support 1. This 567 area would be, let me move this down because it's going to go right here. So what I'm going to say is that the level of support here is going to be 561.33 on the low here. But the top end of that support can also be 574.27. And in the middle of that support area can be right around the 565.25 area. Now, having said that, we are going to set alarms for Monday, tomorrow morning. And one of the things that we're going to do is if we gap below or gap above, is that the upside resistance is where the put side of the trade would take place because it's going to be weak at every resistance level. Yeah, it's just the way it's going to be. So when Google can climb the wall of worry and get back above the 600 level, then we can start looking at other little areas of where Google would go. And, you know, on a standard daily view. Here is going to be a major area. And I'll put this on a trend line for you. It's right here. So if we do get up above there, we're still going to have a 608. It's going to be the same thing that we went through at the same numbers when we started buying 3 months, 2.5 months ago, those very same numbers are going to come back into play. You got to get back above a certain area, 602.50. It's going to be the 607.50. Then it's going to be the 615 again. Then you're going to have to clear that 618.75. Those numbers are still valid numbers from the previous cycle of trends that it had to take out. Those are still going to be key areas. I'd like to point out here that if we can get within the trading range on the daily level, if we hold this support level, then the 580 call and selling and buying $600 put, once it gets up there, selling out of the call, and then we would be buying the $600 put. That's part of the plan. Now, one of the things it has to deal with is this little gap on this daily level between here and here. And right now on the daily, that's where that current resistance is. It's right here. Right here. I had the little gap up. That's where you made the move. That's where your current short-term resistance is right here. See that? I'm going to draw a trend line from this X. That's the low end of that, and that's to the high point of that from that gap. And we're going to either hold it, or if we break it, we would break it, come down, hit that lower trend line, and then at that period, it's right above the 200-day moving average. It didn't have to come right to it. It's close enough. But if we break that support level, we're going to try to see where this little X is in this price range of where this is going to hold. And just to serve the purpose correctly, it's always going to be right about here. And what is that price going to be? In the middle, 573.87. That's before you get down here. If you break support, people that have profit stop market orders can get triggered and bring this down here to these trend lines. And or if we start to hold the low as our support level, and as long as we're closing above that level, then we'll buy the shares at support and sell the shares into resistance. We will buy the call contracts, which will be wholesale, by the way. And what does wholesale look like? It looks like this. I'll show you. For next week, that is. MMTs, the gift of that very daily support level at the 581 level is going to be the lower end of this contract. And that's about $15.50. Now, MMTs, I'm going to draw a horizontal trend line on how to buy discount. Up here in 2012, that was really retail at $89 a contract. What MMTs have done by keeping full disciplinary, let the earnings come out in the earnings season as we did, let this gap down, get the 1 day out of the way, and we are at what we call, look at, the calls were inflated up here for crying out loud, and I bet you that was up toward the highs. And I told everyone that they have to come down. They can't. I don't care which one it is. Not just Google, all of them. But the thing about it is, this is where our chain of command is going to come into play. It's a 580 call that we're going to be looking at based on that daily chart. More importantly is, in February, we would be looking at that upper end of that resistance of where that these calls were inflated up here on a 590 call, February. Right here. They were way up here in value. And they were inflated because they were. $75, $80 a contract, $75. Now, because of your willingness to be disciplined and your willingness to apply your education and your willingness to be wholesale to the market, gives you the opportunity of buying that first round of deflated call option. You're not inflated. Everyone had the risk up here and they got taken to the woodshed. 590. We will also tell you that at that key resistance level, we will be looking at the $600 resistance level, where these contracts on Friday were up here right around the $50 area. We never turn our back on being market makers with the public because the public got marked down at $75 a contract to my MMT entry. and selling up here and selling into the highs. This is a February. It's never been as high as it was. That was your lows at 36. It doubled 100%. Now you're back here. Lower, and this is what happens to people. With great companies, it doesn't matter. Look, this is a buying opportunity. But I got to tell you, that's the February that we're going to be looking at. We will do a weekly, but I'm not going to put that on the video for you. We'll do that tomorrow morning on Monday. And that you, because of who you are and what you're trained to do, is you're trained to do one thing only, which other people have a hard time doing, is they love the calls up here and they held it and they gambled with what Google would do. But now MMT, you're going to come in and the low of that was $7. The high on Friday was $13.80. There was 3,700 volume traded with 607 open interest. The gift of that drop down bid, the gift of discipline, the gift of wholesale entry, the gift of selling back to the public. And this particular February 2012 contract in Google is at its all-time lows. But that's, again, where resistance will be on Google on the equity. Yes. Now, having said that, I will go back here on the daily. And here, I will tell you that we have another system outside of a daily's chart. We have our own systems. And our system is saying at certain levels down here that it makes it more buying opportunity. Now, with the bull rally that we have in 2012 in the first 3 weeks of the calendar year is that equity's got to get marked down. If there is going to be a big bull rally, you got the beginning of one, but the thing of it is the broader market must get marked down, like Google did. I am a buyer and a seller of the option, and I will tell you that we will be very, very aggressive. I said aggressive because I will show the 570 call right here. That was, once again, you were here at $72.50 on a 570 call. February, deep in the money. But the all-time high was really over here at $99 a contract. 570 in the money. That was last year. And the low was $66 or $63.50. And then, of course, the highs up here at $99. And my MMTs, you have taken out all the risk on Friday at $72 a contract. People stay in them. People that bought them over here at $58 on the low. They had a great move up here. They stayed with the earnings, and they got taken to the woodshed. Because whether it's this chart or any of it, you will not stay inflated. No, you will not. They all have to come down. Now, on the 570, the low was $21.50 and the high was $28.70. You're already $6 down, but now the closing bell on it was $23.40. We're going to heavily monitor this call because if they bring it down to the lower support levels, MMT, and that's to that lower level here on the daily, is that we're going to be doing one thing and one thing only, and what are we famous for? Buying wholesale and selling retail to the public. That's what we live and die for. All right? So basically, this is the trade starting Monday. All the bad news is out of the way. The write down in the name is out of the way. Everything that we had forecasted now is out of the way. I'm sorry that the public got taken to the woodshed. They could have listened. They could have sold. And I will tell you, there's going to be a lot more of them just like this starting next week again and the week after. And yes, every great leader is a buyer in the beginning phases, and we're going to really chomp this one, pal. So basically on these gap sequences that I talk about down in here, this is the ultimate support 1, support 2, and, well, the 200-day simple moving average at 560. Now, I'm going to pull up a quick weekly chart. Yeah, it's a little bit more of a lengthy one for you, but the thing about it is I got to look at it in this light. That when we bought the trade, we bought it way over here. Where did we buy it? This is a weekly 200 week we got in over here because that's when the weekly buy signal started. Then the trend started. Yeah, we had pullbacks and volatility within it, but here, you can tell right here, and I'll be happy to take some of these trend lines out for you. Clear. You can see here on this weekly level that unfortunately from a bull trend starts here, 1 week, 2 week, 3 week, 4 weeks above the 10-week rising, a test of the 20, the rising 20, we test in the 20-week moving average, but your resistance is ultimately in a shorter term going to be right below that 10-week moving average. That's 600, and, well, I can just tell you the 10-week moving average right now, and it will change. That's $617. Here's the key. The 50-week moving average is right around 567, which equals to the daily chart, close to the daily simple moving average over here on a daily, which is 562.34. So if we get triggered below the 20-week, we could come down and test this area, that 50-week moving average from here to here. And the 50-week moving average is 56.97 because Google is going to, in the short term, the 20-week moving average is where we look to see if it wants to get back above it because it's rising, but that's going to be the top end resistance level is going to be roughly right about there where we had previous reversals, but that's going to be the upside resistance MMTs. And as long as I'm holding that level or I come down and test that level, then I'm going to be getting it on because I'm going to tell you one thing, MMT, as you've been taught and learned, that when you were up here on an intraday level, on a peak, on a weekly, you were up here at about 94% right in here. You were hitting that peak on a weekly level. And anything that gets up there has got to come down. I wouldn't care if it's the greatest company in the world. They will do what I say. And they will come down so that you gamblers, you better quit gambling and get over here and do it right. Is that if we sell below the 20-week, electronic stock market orders push it down here to this level of where the major part of that 2-week reversal made this all-time high right here. I will tell you that on the weekly level, we're only at 64% now. You're no longer overbought. However, because of the weekly level buy signal, that means if you're buying over here and you got, let's say you're buying up here and you got a weekly percent level that peaks out at 72%. These are levels where when they get down here to 31%, hey, it's time to buy the farm just like we did. But when you're up here at 94% in intraday, 95% intraday on a weekly overbought, you got to come down. We'll be seeing a lot of it in this new bull rally, calendar 2012. How long it lasts? Well, we'll find out. But I will tell you that the 20-week is a major catalyst. So we are set to trade the option market starting tomorrow. And this is the tree that we're going to be looking at, everyone. 580, 570, so it's 570, 575, 580, 585, and up and out of the money at 600 at resistance at wholesale prices with heavy volume, though, because there's a time to buy the dip on heavy volume. There's a time, yeah, you use one contract to get in and whatnot, but these levels of purchases are 5, add 10, get up to 30 of these contracts so that you can take $5 out of the calls for $15,000 profit. That's on 30 contracts wholesale for $15,000 upside. Then there will be other profit tier structures. But this is the tree that we will be dealing with. and that we remain a bull on Google. This is going to be the major Sunday review as of this very moment. And all I can tell you is that on the daily level, we're at about 22.57%. When we were up here at the peak levels of this move here, we were way up here. When we were way up here where this gap down was, we were still high. I mean, this thing back on 1-4 was up here at 92.83%. And we were trailing it. So we sold short to the bottom, and the stock has dropped almost $100, and it's time to get busy. It's time to make money. Google daily chart, support resistance levels, call options, intraday. We will be buying those dips. It's not a 100-share trade. No. 300, 500, 700 to 1,000 shares at support. It bounces $5. You sell it, and daily you can make a great amount of money.